I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is
Hello, everybody. Let's get started. All right. Cool. There's a lot of updates for this week, and also we got some deals updates too. So we're gonna analyze some deals in a little bit. Now, let's talk about what are new. For a news brief, daily news brief that kind of impacts us investors, right? You can visit this website, scan the QR code, and again, if you're on your phone, you can take a take a screenshot on your phone, and then you just need to press and hold this QR code, and it would take you to that to the link. Okay, and if you say you have a monitor, and then you have your phone, you can also kind of do the QR code scanned. So we got some really cool news here, so you can check this out. It gets updated on a daily basis. It's carefully curated for investors. We're now live in 23 states. We're gonna continue to add a couple more. We find it very interesting. We're actually kind of getting a lot of interest for folks that are in Oklahoma state, and they're actively looking for deals, and the properties are still in a very affordable price point. So we're seeing some interest in like Tulsa and other parts of Oklahoma. Okay, next we have this is a new kind of prototype website where you can see all the deals that we have in our inventory and the deals that our partners have as well. This is actually a screenshot of the website. This is not just like one deal, but if you kind of scroll down, there's a lot more. Again, you can scan this QR code or take a screenshot of this, so you can go to this page and check out our inventory. Okay, as another thing, we're gonna also start with a daily campaign, email campaign also, where we will be sending out a deal every day and feature them as the deal of the day. So that's gonna start launching next week. So that's very exciting. There's a lot of deals and inventory here that we can offer to our community. Okay, so make sure you check that out. Okay, of course, the website is the kind of the main part of everything. So you can get deals, you can get distressed seller leads. You can also see all the classes that we have put together. So this would be the source of where you can get information and education. So everything we present here is for educational purposes only, right? Case studies or whatnot, and we don't offer investment, financial, or legal advice at this live meetup. And if you got a deal or lead, you need help closing it, you can submit your deal to yours truly, and we'll walk you through how to get the deal under contract. So a couple of market updates. We're seeing some labor market, right? Economists are expecting the July employment report to show modest growth, and in fact, it's actually seeing signs of cooling. A cooling labor market is going to reduce competition in terms of buyers, but now it also kind of puts a downward pressure in. It also gonna puts downward pressure on the soft housing market. So that's something you want to pay attention to. Of course, we're still seeing some crazy inflation data, right? Which is kind of will counteract and maybe put some upward force to the housing. I got a request to go back to our page on my contact info, so I'm gonna come back here for a second and make sure you take a screenshot. Okay, second one, mortgage rate has reached its highest point to 6.81%. That makes creative financing and cash offers more attractive. There are deals where we're seeing, maybe the owners are getting, 6 point something percent, right? That's still better than the current ongoing rate. So that makes creative financing and sub 2 much more attractive. And we're also seeing, in fact, anecdotally, right, in practice, we're seeing more opportunities too from distressed homeowners. There are kind of updates on the foreclosure numbers. It's been trending up in the past couple of months, and this year overall, we are seeing also it has trended up So there's more and more kind of distressed folks that are kind of late in their payments. So something that's a trend to stay on top of. Okay, mortgage purchase demand is continually too slow, right? That's related to the mortgage rate has gone up quite a bit. You know what that means is that sellers may become more willing to negotiate because there's not as much demand. There's not as much buyers. So if you're an investor, you have cash in hand, or you've got private financing already in place, that's gonna be big leverage for you to negotiate for a good price. All right, let's talk about our featured deals, right? So we're gonna feature a couple of deals here. It's also gonna be on that new webpage for the deal desk. And if you're already on our email list, we're gonna change the newsletter to deal of the day, and we're gonna start featuring these deals that either in our inventory or in our partners' inventories, and bring more deals to you. Okay. So we're not real estate brokers, right? Some disclaimer. There might be equitable interests in the deals, and always do a due diligence. Okay, so if you're in the DFW area, we got some very interesting deal, right? This one is in Denton, and good interest rate. And I think, kind of what we're seeing here, if you're looking for a homestead, this would be a really good deal because it's in a good school zone. And it's actually like, from a university standpoint, it's also really close to the 2 universities in Denton. And the house is move-in ready. It is, there's, very, very minor fixes that need to go in, and it doesn't affect moving in, honestly. Now, in terms of the loan amount, the loan is basically about the same as the estimated ARV. So basically, you're going to be going in. You'll be kind of paying the subject to amount to get in the deal. I think kind of the key point is you can lock up this property at a really good interest rate in a really good location. And I actually went to see the properties too, and it was maintained very, very well. So, good layout too, I would say. So, if you're interested in seeing the photos or the detailed loan information, you can scan this QR code and fill out the form, and specifically request this deal, and we'll send you the information, and we'll kind of chat with you, see if you're see if it's something that you're interested in. You can also schedule a property visit after that as well. Okay, this is also a very good deal. Very, very low interest rate with equity in here. And so the subject to, right, to kind of get in the deal is around 39,000. Again, you'll be buying into equity. Appliances are included. So Wasahachi, also a very good good location. Yeah, if you want photos, right, the detailed loan information before you do a property visit, you can request that on the deals program form, and we'll get in touch. We'll send you all the information. Okay, this is a property in New Caney. It's coming soon. We have to restructure the loan. It's currently in a 15-year loan. So the PITI is kind of high, but it has a good interest rate right now. So also a very interesting opportunity in New Caney. Cleveland. This is also in the Houston area. Really good monthly payment. We see a lot of opportunity as an income if you turn it into a pad split or put it in the furnished finder. There's no major repairs. You probably need to put some new paint and, kind of do a deep cleaning on the property. Maybe flooring, that'll be up to you. We have already kind of cleaned up the house quite a bit, and, very low entry fee. Good interest rate too. This one is a cash property. It's a duplex with a unit in the front, a unit in the back, and then there's also room in the middle if you want to put an additional unit in there. So this would be a kind of cash flowing property, but they are looking for a 299 cash. It is purposefully priced under market value to move faster. And then we also have this deal. It's actually getting a lot of interest in Florida, a lot of inquiries, and also subject to with a pretty good interest rate also. Okay, so these are a couple of deals. We actually, this is an old slide from last week. We had a special topic talking about creative financing. But today we actually have a different topic. Let's talk about, what's new in the news that affects how we look at the market as investors. Okay, so kind of the idea is that we got a couple of kind of key news that we're kind of seeing, and some pattern is emerging with what's happening. So this presentation, the intention is to kind of highlight some of the things that we should be paying attention to, and how it may affect our focus in our investment. So is this our first slide? Let's see. Okay, so we want to kind of pay attention to, which part of the economy is strengthening, which one is weakening, and what does that mean for our next investment decision. The signals that we're kind of looking at is slower household mobility, which was the slide that I was showing earlier. The multifamily valuation, there's pressure to that because a lot of the properties are going to servicing. And then we also see uncertainty in the rate and slowing GPT. So let's kind of look at all these items. Okay, so the first news has to do with transaction velocity. The New York Fed has reported that Americans are moving less, right? The annual moving rate is now below 10%. What that means is that because we pay attention to household mobility because it affects the transaction flow. If people are moving less, there will be less buyers, right? And if people are not moving, they're also not likely to sell. And then renters are also not going to change units, right? So people are going to more staying put. So for an investor, it could create liquidity risk if you're thinking about kind of creating, doing fix and flip and exiting. It will also create a price risk, right? Because if there's not as many transactions, then price is also not going to go up, and either it will stay flat or come down. The property may be worth the same, right? Let's say it's flat, but it will take longer to sell, and maybe the buyer will ask for more concessions when it comes time to exit. So the things to watch out for would be the time it takes from listing to contract, right? Time to contract. How many buyers, right? The buyer pool, how many days it stays on the market, price reduction, and concessions. So if the transaction is slowing down, the next question is, what the supply is competing, right? And what kind of demand we're looking at. Okay, so another kind of piece of key news that we're seeing is that there are more Texas multifamily loans. They're moving into servicing. What that means is that when they go into servicing, the asset values are going to be reduced. Why this matters is that this is a refinancing and valuation signal. a lot of apartments are still performing well from a cash flow standpoint, but if they because a lot of these multifamily have a limited number of years before they need to refinance, typically 5 to 7 years. And so when we are looking at this, we want to pay attention to when it's due for refinancing. The underwriting focus should be on DSCR, loan maturity, rent growth, vacancy, and exit cap rate. But local growth can also create opportunity and pressure at the same time. So what we see here is the Texas Real Estate Research Center has seen that there are thousands of new millionaires now in Brownsville created by SpaceX. And longtime residents may start seeing higher property tax bills, right? So, kind of local economics from the new millionaires, right? Buying up properties as well. They're gonna change that local economy. So, maybe that also means that the Brownsville real estate can also get stimulated too. So something to kind of watch out for. Okay, there is another thing is that there is uncertainty in interest rate as well. So if the rate stays high for longer, right? There were also talks. The recent Fed announcement is that the rate will stay the same, which is pretty heightened at this moment. And there's also talks about kind of the rate will increase to address the inflation. And so if the rates are continually staying higher for longer, then affordability, refinancing, and cap rates are gonna get affected. And liquidity is gonna get hurt. So that's something to think about. Pay attention to the liquidity. You want to watch out for mortgage applications, right? Treasury yield, debt servicing, cap rate, and buyer competition. Now, rates are, national, right? It affects everybody. When it comes to investment decisions, it's local. So we want to focus also at the local markets that you invest in, and what the numbers look like. So kind of the key here is we want to dive into the local economy, right? Does the local economy have jobs that are stable and they're gonna stay? The wage, right? Are they staying pretty stable, or are they increasing or coming down? You want to look at employment by industry. You want to look at wage growth, migration permits, vacancy, GDP, and rent to income pressure. National news is gonna kind of give us some ideas of what to look at, and then we want to dive into each local market or the local market that we are focused on to give us the answer. So if you're interested in kind of looking at some of these data, we can actually pull those and pull an intelligence report, create that for you if you're interested. And I find it very interesting to kind of look at before I before I go into a market and invest in there. And number two is just kind of continually monitoring that local market and making sure the initial hypothesis, right, the initial thesis still stays the same. Now that brings us to the foreclosure data, and this is something that we have our proprietary information. What we have here, just some numbers. And next time, I think we'll create the charts on these. So we have the source of our data here. We have a dashboard internally, kind of tracks the foreclosure filings for each county. And these are the numbers that you see. Okay, so in general, we can't see it here, and I wish we have a more graphical number, but in general, the number of foreclosure properties have been kind of trending up, as I mentioned in the beginning. And so, those are the things that, as an investor, that's interesting because there's more distress, and it'll be easier to put deals under contract. And now the next thing is, kind of monetizing on these contracts. Okay, so I'm going to end on this slide. The conclusion here is that different markets are kind of being shaped by economic forces. So we'll pay attention to the rates, right? The jobs market, kind of overall how the national economy is doing. Also locally, how is the jobs and how is the housing demand and everything else come together to kind of create some unique opportunity for our local market, or it's something that we want to kind of wait and see. So those are the things that we have to make a decision on as an investor, and we want to just, I guess, have the right data ideally to go into making that decision. So real estate insights and intelligence, right, is becoming more and more important. There's a lot of data out there, but are we using the data to create the right insight and making the right decision? All right, so that's what we have prepared for you for today on this special talk. Okay, so to end this session, we're gonna end a little bit early. We have a couple of phone appointments with distressed sellers, so we need to prepare for that. Thanks for joining us. If you are interested in learning more about different types of distressed sellers, right? We have 4 of these classes on the left side that will kind of run on a weekly basis for you to kind of learn how to find houses that are discounted, how to buy houses before they go into foreclosure, how to buy it during the foreclosure. So there are different ways where you can acquire the properties either before it hits foreclosure or during the foreclosure auction. There are different ways. And then the 6 ways to make money and build wealth, to me, is a really good intro course, right? If you're just kind of getting into, you're learning about real estate, investment as an asset, right? How can I, kind of learn it in a way where I know it enough that I can consistently make a profit. I'm making an educated investment decision. You can start with the class on making money and building wealth consistently with real estate. We have this Deal Makers Live today. That's right now. And then tomorrow we have office hours also, if you're interested in kind of, getting to know us, learn about the deals that we have available, or just kind of make a connection, introduce yourself. Right. And I'm going to end the session with this, right? We learn the most when we can take action. It's okay to make some mistakes. And we can reduce the number of mistakes or the cost of our mistakes if we, have the right education and the right mentorship along the way. So, you want to always take action, right? That's how you can gain experience and learn the most. And now you have the real life experience for doing the deals. All right, that's all we got for you today. Thanks for joining us. We'll see you again next week. Thanks, everybody.